Hey guys and girls, just waiting for all platforms to sync together so we're online. Let's do this. Hey guys and girls, Nathan here from B.Invested here, shouting out to the B Decentralized page, the Nathan Birch page, the Zinger Finance page as well. Just got a lot of topics to cover this evening. I got a lot of questions coming in from the community, and just want to get straight into it. So thanks for tuning in again, guys, and having me as a part of your evening viewing. Today, I want to cover off on some news that's out there, talking about some opportunities that I've been purchasing myself on behalf of clients as well. Questions around finance and taking advantage of the opportunities out there, as well as opening the floor to you guys for questions and answers. So with it, I'll get straight into it. I made the slogan as the I don't know if you guys can all see this on the video as it pops up, but I put in there the Corona word, which I still don't say, and the word 1984, the Orwellian state. And there's a book out there. It's by a guy by the name of George Orwell from 1949, I think it is. Let's just go back and check the year that it was made. George Orwell. The book was published in 1949, 70 years ago now. And it's a book about a fantasy world in 1984, which the government turns into a full communist, totalitarian, fascist state, and it's a book that's been widely regarded to as the sort of world that we're heading into, and it's eerily similar to the world that we live in today. So it might be worthwhile a bit of a look into that book at some point. A lot of people think that I'm crazy with some of the stuff that I post out there. However, it's just interesting looking at the world that we live in, right? And getting on to a few sort of communist sort of topics right at the moment. Want to get straight on to first thing, interest rates. No rate cut today. We did the Facebook Live earlier on today. I'm not going to cover on that too much. If you didn't see the Facebook Live, go and check the video prior to this one and see what I had to say about the rate cuts prior to them happening. It was the first time ever that I was sitting on the fence of a rate cut or a no rate cut. We are going negative, guys. Matter of when. They can't keep up this money printing like they are at the moment. The level of currency that's being printed into the economy, it's amazing. It's amazing. I'm going to break down some stats for you shortly as well. But yeah, we didn't see a rate cut. All indications that have been using for the last 12 years are now out the window. Those indications that I had prognosticated and forecasted, is it my little crystal ball that I've been looking into, which is now defunct and no longer usable. That's pretty much where we're at this point in time. The RBA is losing control of the currency that we use here, and central banks all around the world are losing control. I believe they're buying up the balance sheets there. The central bank's buying up the balance sheets of the bond market, and that will either cause inflation at the other end of this, or if they take the bottom out of the market, interest rates will go negative, and I'm very confident that they still will. So keep an eye out. I will keep prognosticating that. I'll keep sharing that inside of Birch feed. So those of you that are in Birch feed, I'll keep sharing my views and the indications I'm looking at from the next forward planning of what's to come next throughout the situation. However, as I said, communism. We're living in a state where everyone is on Centrelink now. Who would have thought, turning into 2020, that half the economy would be on Centrelink? So numbers here, and this is according to some stats here. There's about 13.5 million people employed in the workforce. So 25 million people in the country. Out of that, half of them are kids, half of them are retired, whatever the case may be. Half people may be disabled, whatnot. Which can't work. and we've got 13.7 million people in the workforce. At the moment, we've got 1.3 million people on Job Seeker. 1.3 million people on Centrelink. Who would have thought? Job Keeper. There's some articles that I've been looking at. There's been over 500,000 businesses apply. How many staff would each business have? 1, 2, 3, 5 employees, 10 employees. How many staff members how many staff are on JobKeeper now? Have you claimed your JobKeeper? Do you think you are eligible for your JobKeeper? I've been speaking with lots of people. As I said, guys, I'm booked out, I think now until like September for meetings and map sessions. I've got to stop taking on meetings, so I'm going to start cancelling and not doing the meetings moving forward. So if you are booked in, that's cool. If not, it's getting a bit late, but you still got my whole team at B.Invested that can help you and guide you. It just won't be just myself, because I'm killing myself trying to share the love and be able to reach out to each and every one of you. But yeah, with it, if you haven't claimed your JobKeeper, speaking with so many people, there's so many people that haven't. They didn't realize they could or that they were eligible. This is Centrelink for the middle class right now, and even for the wealthy. And I encourage everyone should, if they're in a position to qualify and whatnot, they should be sort of tapping into that funding. We've all seen how harsh these communist totalitarian fuckers are trying to take your money, be it any government, anything with a .gov on the end of it, is there coming to collect, especially the ATO. So it's good to see that they're, flushing some money back out in the economy now, which, everyone should be claiming. So if you haven't claimed it, flick through my team an email, just put in there JobKeeper maybe as a heading, and flick it over to my office, and I will get my team to put you in contact with the appropriate people, be it Ridwan from One Path Accounting. He's probably the best person to speak to about how you can actually start claiming those sort of things from your business. With it, so if we look at it, 1.3 million people, which is about 10% of the workforce, is now on Job Seeker, Centrelink. Job Keeper, if we've got 500,000 businesses which have applied for it, and then we've got, say, 5 staff per business, that's another 2.5 million, which are on JobKeeper. So the government's now paying, for another sort of 17-18% of the economy to be on Centrelink. So we've now got 10% on Job Seeker, another almost 20% on JobKeeper. That's 30% of the working class of Australians which are on unemployment benefits or employment benefits. If we look at the public sector, anywhere around that, 1.5 to 2 million people that are public servants, which would bring that up to almost 50% of the Australian workforce is now being paid from the government, which is very, very, communist, totalitarianism, fascist, state-owned sort of position. So just interesting to observe that. Half the population, half of Australia at the moment is on IV to the government. Who would have thought, guys? Who would have thought? Called it a universal basic income beforehand, a UBI. Call it whatever. What we're going to now see is people, as we start seeing these house arrests laid off and people can go back out into society. Who knows what's occurred since everyone's been in lockdown, but people go back out into society, and I've been out there every single day. I've been out there every single day, living life as I normally would, which is limited by the hustle. But if we go out there now, how many people are going to return to work, right? How many people are going to be like, I'd rather be on the dole than having to go to work. I can get paid the same sort of money from sitting at home. So, the government's going to have to step up their efforts to try and get people back in the workforce. Is there going to be a job creator Is there going to be some incentives to take on staff, take them off the books? Because they're going to have to, they've got half the workforce on Centrelink here now, guys. Middle class, poor, wealthy, from end to end of the economy is now on Centrelink. So how will this shape our economy moving forward? Will people want to be going back to work? How many people have decided in this period of time, fuck, I want to build a business. I don't want to be trapped to my job. I was spending 2 hours a day in a train, catching work, or in a bus, brushing my teeth, going to sit at the desk. Boss that hates me, got rid of me, quick as anything. Do you want to be in that trapped system? You've got the choice right now. You can be stuck and plugged into the matrix, fed full of crap as a commie, or you can, take the time to take personal liberty and freedom into your own hands. So, yeah, with it, it's just going to be interesting. I think we're going to see a lot more stimulus flow into the markets to keep things afloat. How many businesses will be saying that? We haven't even seen the businesses start laying off people. If you stop JobKeeper, I reckon half the business would throw their staff out now and say, look, I don't need them, can't afford them, whatever the case may be, which is a tough thing out there. And I'm not trying to, I say some of these words like, communists and whatnot, but, it's important. Like, people wouldn't have seen this coming, right? The opportunities out there are great, but the ability for people to lose their personal freedom and rights is also equally at stake. So, educate yourself, guys. Try and do what you can in your own personal life to be able to, make the best for yourself, whether it be even a crap situation. So we're all affected in some way, shape, or form. With it, we're all affected in different ways. So, looking at what have I covered here, there's a lot of people that haven't. There's only half the amount of people that were interested in JobKeeper have signed up. So this means that there's a lot of people that haven't collected it yet, don't feel like they're eligible. Entry to eligibility is very grey. There's lots of different, sort of factors at play. It's important that you go and research all of that into detail. If you need help, as I said, just reach out to my team. Just put in there JobKeeper so they know what you're referring to with your email. Read this article beforehand, just on my heading that said the C word, that was the corona word, 1984, which is in the heading here. Being that totalitarian fascist state, saw this news.com article earlier on today. It says, the coronavirus, what restaurants would look like after the C with the numbers in it, which I called 1984. It says here, the measures in Restaurant and Catering Australia has issued its reopening guidelines to a national cabinet, which includes a series of practical, low-cost measures to get restaurants running again. These measures include, right, you are going to be fucking kidding me that I'm going to download that shit on my phone of an app, right? If I offend anyone that loves signing up to this stuff, sorry about that. But, it's mandatory. Now everyone installs this on their phone. They're tracked, tagged, tested, like you're a cattle, right? The things that you need to have in these restaurants now is a 1.5 meter distance between tables, so social distancing the tables. All patrons, this is the part, right? This is where you guys may already know, which is probably cool that you're here. You may not know. Share the love. Share it with your friends, family, loved ones, and whatnot, that everyone's going to get royally fucked on this one. All patrons must have the Safe app, the word that I won't say, Safe app, or record their name and number at the place they dine in so they can be contacted later if needed. You can't go to a fucking restaurant now. Is that what you're telling me? You're not allowed a seat. You can go sit in your car. I'm fortunate that I have a ute and I fold my tray down like a table and I can still eat when I'm having chats with people and whatnot out and about. But I'll see these people that go and get their food and they're like, where am I going to eat it? Or cut something up and do whatever, right? Ute tray, get yourself a ute, guys, and you can use it as a table. But you can't go into a restaurant. They're going to open up restaurants. You can't go unless you're fucking microchipped and programmed. Like, come on, guys, come on. They're removing the limit on tap and go payments, having wipes available for patrons to wipe down the cash register keypad before use. Like, why have they removed the cap, right? So let's say it's a $500 purchase. You don't use cash. You don't need to touch PIN number. You just tap the chip on it, right? And we're heading to a place which is very, very interesting in time. We're entering into a cashless society. And, in the May budget 2018, very openly talked about this. It may have even been on the Raw and Uncut video series, that 5-part webinar series, which is on YouTube. Maybe someone correct me if they saw it on there or not. Or it may have been in the mentoring program where I shared it. But we had them come out. We had Scott Morrison, at the Treasurer at the time, come out and introduce a cashless society system. And here we are 2 years later. He's the Prime Minister. All this stuff goes through, and it's happening globally, right? You think about it. When was the last time you organised for your family members to catch up, mates to go on a holiday, a weekend away, to come over for a dinner party, whatever the case is, right? Take out this martial law stuff out of the equation. When was the last time you tried to organise something and you couldn't get everyone together to agree on the table, right? We are talking about global systemised control of, these things are being rolled out. Right? If you tell me it's not programmed, then it's, what else is, what else is it then? Just want to look at some other news articles today. My last news article before I get into the main part of my discussion is an article here from Sydney Morning Herald, and it is from the weekend. It was announced on the weekend. I did put this onto Birch feed. For those of you that are on Birch feed, you would have seen this already. If you're not on Birch feed, email my office your phone number. It's free. Don't be a tight ass. You don't have to pay anything. Don't have to give me any money, right? It's just send over your phone number so we can add you into Birch feed. But this article here says, "Despicable Me, the boutique bank rating accounts linked to home loans." So ME, it's called the boutique bank owned by the industry superannuation sector, has blindsided its customers by removing cash from accounts linked to home loans during a pandemic that has increased financial uncertainty. Right? There's an important reason why we need to look at this and dissect it into little bits and pieces. So the boutique bank owned by the industry superannuation sector has blindsided its customers, removing cash from accounts linked to home loans, right? This isn't something new. This has occurred before with certain institutions, right? The thing I found most interesting in that part is the boutique bank is owned by the industry superannuation sector. Members Equity Bank, which is owned by 26 major super funds linked to big unions and markets itself as one of the country's most trusted lenders, stunned customers on Monday when, without permission, removed all the funds from withdrawal facilities to pay down home loans, right? So this has occurred for the last 3 years, right? It was a liquidity squeeze, right? It was liquidity getting sucked out of the system, right? I'll stay on subject. I would have talked about something different, which was all in Birch feed 2 years ago when I talked about it. But I find it very interesting that this ME Bank, the Members Equity Bank, is owned via 26 superannuation funds, 26 super funds, right? So where is their liquidity coming from? That is the interesting part. That is the exciting part, because everybody, why have they got a liquidity squeeze? There's money going everywhere at the moment. Everyone's getting, you get a free $1 trillion, you get a free $1 trillion, you get a free $1 trillion. Why is this bank having to claw back their position? And is that due to the fact of a lack of liquidity due to superannuation funds? Because everyone's now reaching out going, yeah, I got 10,000 out of my super, I got 10,000 out of my super. Your super fund is fucking broke, right? We've seen Wolf of Wall Street. We've seen them, doing drugs off hookers and all that sort of stuff. Here we are looking at a totalitarian, fascist, communist state doing the same thing with these institutions, with your money. This is your superannuation. This is your retirement. Your retirement funds are broke. You're out of money in your superannuation fund. Where does your super fund go? Is it in shares? Is it in property? Is it in whatever inside it? If it is, right? The questions that I always ask people to ask themselves is, who at the super fund do you deal with, for starters, right? Do you know their name? Do you know what their background is? Do you know what their belief system is? B, where is the money invested? Is it invested in the shares? Is it invested in the property? If it's invested in the shares, tell me what shares it's invested into. Can you answer that? No. What property is it invested into? Oh, it's invested in a property fund. Well, let me tell you, a shopping centre doesn't go out and get a refinance on their shopping centre at 90% equity from a big four bank to get liquidity, right? They pull it from all different places. The financial instruments that are created, there's so many derivatives inside of your super fund. Who knows where it's at, right? Who knows where your super fund's at? Here we are when people are asking for a measly $10,000 out of their super fund. And I don't say measly as in like, oh, it's 10 grand, right? $5 is a lot of money. $10 is a lot of money, right? But in the grand scheme of things, when we talk about trillions of dollars of liquidity in the banking system and your superannuation funds, there's no liquidity in there, guys, right? Why is this bank the one that comes out and says, well, we're going to start taking people's top-up loans, right? A lot of people think I can go back. I was talking to someone the other day, and this is, I'll keep it brief. The leg's falling off my chair. I need to tighten it up. I was talking to a client the other day, and I'll keep it very short on this. The client mentioned to me, I said, get your fucking equity out of your property, right? The guy just settled on a property 2 months ago, refinancing it, pulling out like $70,000 worth of cash. He goes, I'm going to wait until September because that's when I'm happy to go get it. And it concerned me because getting the equity now, you don't know what the bank's going to do tomorrow, right? These are people, what ME Bank, what Members Equity, whatever the fuck they want to call themselves, have done. Let's say you got a loan at $300,000, you've got a $200,000 outstanding, you've got $100,000 there in your offset account. They have wound your loan back so you cannot get your $100,000, right? It's not your money. Let me tell you that. When you've got money in the bank, you've got 100 grand in your bank account, in your savings account. If that bank goes bankrupt, right, you're a creditor to the bank, right? No different than you're a ledger on your point on the balance sheet. You can't go and say, well, that 100 grand is mine, right? No, you're a creditor to the bank. They divvy it up, right? It's the same as an insolvent business or whatnot, pennies in the dollar. What happens, right? This is your super fund. So one, be cautious of your super fund. Two, if you've got access to equity, would you be better having control of that? And especially at a time like now, yes, it would be more important to do that without giving financial advice to everyone. I don't even worry about these disclaimers anymore. But yes, I'm not your financial advisor. This isn't financial advice. And there's my disclaimer for this evening's fucking video. So on its website, ME Bank promotes its redraw facility as a product that allows customers to make extra mortgage repayments with the added flexibility of letting clients redraw money from the loan at any time for free. It's not your money, right? It's not even money, it's currency. But let's just use the word money for the exercise here. It says here, the number of the customers contacted the Age and the Sydney Morning Herald after noticing between 10 and 50% of their withdrawal funds were absorbed into their home loan without any notification, right? The importance of reading every little term within inside your mortgage contract. I'm about to go and start reading the little terms inside the mortgage contracts to see if there's some, I don't know what you'd call it, words that would be beneficial to a mortgage holder right at this time, which would help leverage banks to play ball on anyone's part. So it's something when I get a bit of spare time, which is hardly ever, but when I do get a bit of spare time, I will read through those mortgage contracts word by word and see if there's any way that people can sort of benefit from this on that front as well. It says here, the customers said they believed their money was like savings that could be withdrawn at any time. Their anxiety was amplified when the bank failed to return their calls. I've rung the bank 3 times and spoken to 2 different departments, and they told someone to call in 48 hours. One customer said, I'm still waiting. It's absolutely breathtakingly stressful. Another customer said, I was managing okay with the stress of the corona until this happened. Some customers took to social media. Comes as the big 4 banks have pledged to go easy on customers struggling to make loan repayments during the scamdemic. The lenders have lifted provisions for bad and doubtful debts, slashed or suspended dividends, and in the case of National Australia Bank, raised fresh capital to shore up balance sheets, right? The banks are completely fucked, especially one which is tied to your super fund. The super funds, 26 super funds. Who do you deal with at your super fund? Where is your money in your super fund? What the fuck do they invest your money into? How can you get access to it? They can't give you the $10,000. You got $200,000. You asked for $10,000 now. They're finding difficulty coming up with the funding, and they've got to go to the other end of their customer banking to try and wash around some liquidity there, guys. Come on, be careful with it. These are things that you're going to see out there. Be smart about it. One of the things that I'm grateful about at this period of time, I have haters out there. I have people that go, this guy's going to go broke. He doesn't know what he's talking about. This guy Stuart Little, he's a little fucking guy that's talking about fear and all that sort of stuff, right? I'm probably one of the most optimistic people I've ever come across. But the thing that I'm most humbled about via this period, the reason why I'm always so happy, is I saw it coming. I was prepared. I took the right action, and I survived, right? That's a really cool thing, right? But there's a difference between surviving this and capitalizing on the opportunities that are out there. So on that note, I'm going to write a sheet of paper here with lots of numbers and stats and figures and just different things out there that I thought I would share with the community this evening, just on what I've been working on out there in the marketplace. Probably 6 months leading up to the scamdemic and through this scamdemic time. So if we look at the video that I posted earlier on today, and I'm not going to go into it, I don't have all my notes here, they're in my office. The information that I showed earlier on today was basically the M1 money supply. In short, I'll just put in a little bit here. The M1 money supply up until since 1980s, since they were reporting on it, pulled this chart. Look up on, maybe Google this, or we can all Google it together actually. Let's get our phones out. Let's Google on trading economics M1 Australia. So let's type in trading economics M1 Australia. If we have a look here at this chart, which will load in a moment, it just looks interesting, right? It looks like a step. Looks like a step up. That is the 1 year chart from May 2019 to May now. If we have a look, it's just gone up a little bit higher as of the last couple of days. But if we go to max, you will see that the chart has a very interesting look to it. You go 10 year, has a very interesting look to it. Go 5 year, it just moves across, right? What this indicates is all the money that was printed over the last 25 years or whatever was in the $200 billion band. 50 billion comes up to the late 90s, the tech bubble, about 100 billion. Get up to the GFC, they print lots of money, goes up from 200 billion to 300 billion. I sound like I'm a racehorse presenter here. Goes up from 200 billion to 300 billion, goes up to around 2016, it caps off. We can see here, this is where APRA fucked the market. See where it went straight line? See, like here, where it went straight? That's when the market shit itself. I was crucified in the media. They go, oh, Nathan's selling properties, going broke, blah, blah. No, Nathan was preparing for what had occurred at that time. And then we've gone up from 400 billion to $1.2 trillion straight away, within a week, a month, right? That's when the market started to recover. A lot of people out there worrying about saving cash. You've just lost 2/3 of it, right? Understand how the liquidity, how the money is being printed, thrown out there, right? You think that when we look at, actually, there's another article here that I thought of as well for you guys, which was, not that one, here we go. It's from CNBC. This is the article here. The US Treasury seeks to borrow a record of $3 trillion trillion this quarter, right? $3 trillion fucking dollars, right? Who remembers when they were a kid and you go, oh, I'll get my fucking little red frogs and they're like 5 for 5 cents, right? I sound like one of those old fucks that is, no offense anyone, right? My mum and my dad, when I was a kid, my dad would go, oh, son, when I was at school, a threepence would buy this and whatever the case may be, right? I'm one of those guys. I wasn't this guy 10 years ago, right? Did I suddenly get old over a period of 10 years? Or am I saying that, we've all been severely fucking ripped off here, right? You think you're getting wealthy, you think your money's going up, but it's not. Your money's losing its value and everything else is rising against it. So who would have thought, who knew what $3 trillion was 10 years ago, right? $1 trillion, right? People used to have like, oh, I'm going to be a millionaire one day and $1 million is going to be a lot of money, right? And then we go, oh, you could be a billionaire, right? Billionaire sounds great. Fucking trillions of debt, right? $3 trillion worth of debt. But wait, that's this quarter, right? $3 trillion. There's $1 trillion a month the US is printing off, right? Looking at our M1 money supply, looking at the amount of money that's being printed, or currency, but it's called money. What's that going to do to the markets, right? Everyone always thinks like, oh, things are pretty bad out there, right? Like I've had people calling me up, and I appreciate it. Like I really do. I've had people, like friends and family, and they're going, "Are you okay, Nathan?" Like as if there's been a fatality, right? Like, oh, is everything okay? You okay? It's like it's nice and it's humbling and whatnot. But this is great, right? This is like the opportunity of a lifetime. And I just see, because I'm, I've got debt, I've got assets, I've got other types of assets, I've got different types of, financial instruments that I can, use as ballast. And who's seen the story about, there's that movie called Danny Deck Chair, but there's also a real life story of the guy with the deck chair. And I think his name's Larry Lawn Chair, I think it was, right? They called it Danny Deck Chair, but there's a story, which is a real story about this guy called Larry Lawn Chair, I think it is. It's funny, right? And this guy created helium balloons in weather balloons and put them around a chair, and then his girlfriend it was all programmed for him to take off, and then there was too much compression and it took off and it snapped the cable and he flew up in the air. And he went up there. He didn't just go in this chair with like a handful of balloons that were there. He had balloons in like a circular motion. So there was like a balloon, more balloons. And he took a gun, and he also took big water tanks. Like they were water tanks full of water, right? And why did he have big water tanks? It's because he was thirsty up there? No. The reason why he took the water tanks with him was for ballast, right? If he needed to go up higher, he could drop the water and go higher. If he wanted to come back down, his gun was to shoot the balloons and to help him come back down to the ground. Financial instruments are used in a similar fashion, right? And here I will put my disclaimer: no financial advice. I'm not giving anyone. This is just general feedback on what I look at in my own personal position. But I think the opportunities that are out there, ballasts using other financial instruments, using property, using debt against property. I'm seeing people pay out debt. It's like, why would you want to pay out debt when it's only 3%, 2.5% interest rates out there? You know that they're never going to go up, because the extra $1 trillion that was printed in the last 6 months in Australia, they won't be able to pay that back. That's why we have to drop interest rates to support that market. So we know what's about to happen next. If we can see and prognosticate things that are happening in the market, you can sort of gravitate as, okay, what levers are being pulled? What's going to let go? Is it going to be a balloon? Is it going to be the water? Are we going to go up? Are we going to go down? And, for me personally, I'm very blessed and grateful that I've got the debts with the banks and whatnot, because it's tremendous. Because the more money they print, the more forgiveness I get for that debt, and the cost of the assets rise. So on the note of assets, on the note of assets, I just want to talk about some assets and how we've secured them, types of property assets I'm talking about here. Some of the interesting benefits behind them, and how the deals stack up. So I've got one here in Sydney. Just did a bulk deal, 320 grand, rent for $600 a week in Sydney. It's a dual occupancy property. It's brand new. Pretty cool. Picking up below build cost. Sydney, 320, rent for 600, brand new. 148 grand for a property. The owner paid 128,000. Guess when the owner paid 128,000? In 1988. Picking up a property for 148,000 in 2020, where the owner paid 128,000 in 1988. Owned it for 30 years, made 20 grand. Right? The property is positive cash flow now. It's below market value, and these things used to sell for around the 220 to 230,000 going back 7 sort of years ago. So we're picking up the bottom of the market. Sydney property picked up earlier on this year for 310,000. Person just refinanced it for 350,000, so pulled out a bit of equity from that. A house in a major capital city for 210,000 is settled today. I was on the phone to the person today. You probably know that the conversation. So if you're watching tonight, you'll know your property. Purchased it for 210. I think maybe we got an extra $5,000 off due to the ability of negotiating the pest and builder report. So whenever I find an opportunity when negotiating something, always lay the booty, right? Always it's like, give me an extra $5,000, right? And so yeah, I think maybe the purchase price may be like 205 for this house. It's in a capital city. Rents for about $300 a week from memory. But the most important part is that I'm trying to do a refinance for him. It's settled this afternoon, right? This property bought for 205 grand, settling this afternoon. Hopefully it's settled because we're going back. I've already hit up my finance team to pull out equity from that property for the client in order to see if we can get it revalued at 250, 260K, which I believe I can. So it's cool, right? 50K, you got your 20% deposit back out. Go buy another one. Got another deal. I was just getting a text from this person beforehand, which I need to reply to. Bought a property in Sydney for $310,000 just before Christmas. After the property market started taking off in June 2019, refinanced that, I believe, for about $430,000. So he pulled out like 100 grand. That's pretty cool. What's this one here? Yes, $107,000 for an office. Right, I picked up an office for someone, $107,000. There's another one in the complex for $220,000. I picked this thing up for $107,000. It rents for $15,000 per year, so it's got about a 13% yield on the property. The owner paid $80,000 for this. So we bought it for $107,000. It's worth about $220,000 because there's another one that's smaller in the same complex. It's within 5 kilometres of Brisbane CBD. 5 kilometres. It's the CBD. Now I'm talking like 50 square metre office space here, right? Imagine 50 square metres in Sydney, right? In Kent Street, George Street, King Street, whatever the fuck street it is. Brisbane, in that type of location, for $107,000. It's a one-off. The owner paid $80,000 for it in 1984, right? 1984, like George Orwell's 1984 communist state that we're talking about beforehand. This client bought a property 30 years, what would it be, 30 odd years later, 35 years later, for $27,000 more. Instantly, there's another one in the block for sale for double that price. So I bought it at half price, and it rents for 15 grand a year. So that's pretty cool. Picked up a unit recently for a client. It's about 15 years old. It's in Parramatta in Sydney, 360 grand. Nothing for sale in the suburb for under 500 grand. So good purchasing there. Just purchased 3 off-market villas in a city, not in a regional town. Like none of these properties, maybe some of them. I don't know. I don't even think I'll put any region. Oh, I think maybe I'll get to them. Yeah, I think there's maybe 1 or 2 regionals here. But actually, no, there's a few regionals. The next one's regional. But 3 properties off market in a capital city. Picked them up for 140,000, rent for 145,000. Sorry, I know that one of you guys are on here tonight that's watching because I saw your name beforehand. 145 grand. They sold for $290,000 in 2015. So picking up for half price what they sold for in 2015, and rental on that property. I think they rent for $250 per week. These things are only like 10, 15 years old, with lots of depreciation left on them as well. So if somebody paid double the price, this is how I look at the deal, right? If somebody paid double the price, I'm picking up for half price, pick it up for half price, wait for somebody to pay double the price again, sell it off, you just doubled your money, right? But if you're only putting down on 150 grand property, right, you can put down $30,000, which is a 20% deposit. You'd have a $120,000 loan. You'd have $12,000, $13,000, $14,000 a year rental income coming through from that type of property. And you'd have to be a 12% yield on the loan. You'd be paying like 3 or 4% interest rates, right? So you'd have a good, solid cash flow stream coming through. So when people think the property market's going to fall apart, the arse is going to fall out of the market, let me tell you, those people will be your fucking tenant, right? And that's what happened, right? That's what happened in the GFC, right? The market doubled, people shit bricks, and then idiots like me, going back 5 years ago, 10 years ago, I used to parade around on TV. I'd be like, oh yeah, I'm on TV, right? My ego was like, cool, I'm on TV, right? What the TV was doing in that Orwellian 1984 totalitarian fascist government system, the system was putting me there to be like, oh, look at this guy. You could be like this guy, right? The reality is that we look at the market now and all these people are like, you know, I can't afford a house. It's too inexpensive. This guy's greedy. This guy's greedy. No, it's not, right? The fucking system's rigged. It's a rigged game, right? We saw today rate cuts. It was rigged, right? Here we are looking at everything on the chessboard. It's all rigged, right? It's all rigged. So go and get your piece of rigged real estate, right? Real estate will benefit from this. Interest rates have gone down to nothing, right? When you think about it, if you're putting down, let's just break down some numbers here before I go on to any other properties, right? If you can pick up a property in a capital city, it costs you more than $150,000 to build a property, right? To build a 2-bedroom unit will cost you more than $150,000 in 2020 to build. What will it cost in 2030? It will cost you more because wages will be inflated away and all these sorts of things. There's just one other thing, right? Think about wages, right? If the wages stay stabilized, right, that means the cost of goods will go up, right, with these new stabilized. That means that assets like property that would need to be built would cost more to build, right? Because they have to charge more and whatnot. And suddenly assets get dragged away again. But let's leave that aside. If you're paying $150,000 for a 2-bedroom townhouse or a unit or a house, right? Picking up houses in capital cities, as I said beforehand, $205,000 for a house in a capital city. I can pick up a house for 150 grand in some capital cities, right? Looking at these properties, if you were to put down a $30,000 deposit, so people say it's hard to get into a property, right? Pick up a property that used to sell for 300 grand for 150 grand. Cool, right? Half price. Now, we're picking up the property for half price. You put down a $30,000 deposit. You have a cash flow. So you have a loan of $120,000. $120,000 at 4% interest, right, is $4,800 per year. If we then go on the flip side of that, the cash flow for $250 a week times 52 weeks is $13,000. $13,000 over 4,800 would leave you with, mine's not working right at the moment, 5 off 13 would be 8,200 a year. As long as your expenses are less than 8,200 for council, water, strata, insurance, real estate agent fees, you have now got positive cash flow. All right. Let's say you've got $3,000 a year positive cash flow. If you've got 10 of them, there's $30,000 a year. What about when the rent goes up to $300 a week? That extra $50 a week times 10, there's another $500 a week. An extra 26,000 a year. There's $50,000 a year, 56,000 a year. People ask me, house prices are going to collapse, right? People are calling me up. Not going to fucking collapse, right? Maybe in some top ends, right? They have, right? There's an article about rents. I think it was that. Have you ever realized, right? Let's just look at this rigged fucking system we're in, right? If you were to turn on your TV, you see the same names, the same fucking expert names, right? From corporations, right? Corporations. Who owns those corporations? Who puts those people on that stage and that platform to sort of brainwash, right? It's interesting to see in that media space as to who are the ones that are setting the agenda, right? Are they from 1984? Who knows? I'm not from 1984, I'm from 1985, baby. With it, so looking at building a portfolio, can you build a portfolio in 2020? Is it, the risk has been removed from the marketplace, right? Who cares if you can't pay your mortgage? Bank will put you on a mortgage holiday, right? How are people going to go bankrupt with that? There will be people that go bankrupt, right? Inevitably, but they've got to push this system along, right? Like there's a lot of debt out there now, right? It's checkmate, right? There's a lot of debt put in this system. There's a lot more vested interest than, mum and dad property investors, Nathan Birch property investors, bigger chess pieces to move here. And if they make the wrong moves, that's the chessboard that gets thrown off the table. So anyway, getting back to deals, I've got a regional deal here for someone, $90,000, and this thing he sold previously for $400,000, right? 5 years ago. This one was in a mining town, $90,000, and sold for $400,000. Tremendous buying. Brisbane, a little unit, $120,000 for a unit in Brisbane, rent for like $230 a week. $120,000. If you put down a 10% deposit, that's $12,000. $12,000, right? I've got to be careful with what comes out of my mouth, right? Because I'll joke about stuff, right? I'll joke about things, right? Where could someone get $12,000 from, right? Where could someone get $12,000 from? Right? I can't give you guys financial advice, and that's certainly not what I do. As a business, I have got financial advisors. If you need help, speak to financial advisor. As I said before, and I can't even take meetings anymore. I'm booked out to the rest of the year. But $12,000, $15,000, $20,000, $25,000, right? People go, I can't get into a property. Well, find $12,000, find $15,000, find $20,000. Right? It's not that hard, right? Raising capital in this market, you get paid for sitting at home on the dole, right? You get stimulus checks. People are getting $10,000 out of their super, another $10,000 out of their super, right? And big financial advice. That was just in general context that I was saying people do that. Don't go and do that. So, but people have access to $10,000, $20,000, $30,000, right? These bread and butter sort of properties that are on sale that you can pick up in certain places around the country. That's where some opportunities lay in 2020. Once again, a unit, Parramatta, Sydney, $330,000. Person doesn't realise it yet. I'm in the process of starting to refinance their property already. They don't know that they're getting a refinance. I surprise people at times and say, right, it's time that you can buy another property. I knew when we're buying this thing, we're going to get equity, and we're going to be able to grab that equity and throw it into the next deal. So that is one of those deals. And my client that bought that is going to be able to use that capital to put into another deal that they're settling, which I'll get onto later because I actually noticed it's in here, but no one's going to know which one it is, so I don't disclose any information of that person. I've got a property which I think the person would be online here, and if she is, I'm probably sure I'll get a text message saying, "Hey, look, isn't that my property you just talked about?" This person bought a property, settled last Thursday. It was $200,000 for the property. On the Saturday, I spoke to the person, and they said that I said, "I think I can get you some equity." Was able to refinance that property straight away at $255,000. So, there's $44,000 net equity coming back for another deposit. I've been picking up a few around the 130 to 140 in Brisbane, and I'm in close to the city of Brisbane. 250, 280 a week rent on those things. Got a property. There's one left, if you're interested, which is in the Sydney sort of market. I'm not going to go into any detail. It's in the Sydney market. If you're a client of mine or an investor that I help out, hit me up. I can give you the info. If you're not, well, then you need to be a client to be able to get access to these deals. I charge a fee for doing the deals, of course, naturally. That's what I do. But this property here, 200 grand for a 2-bedroom property in the Sydney surrounds sort of market. So it's pretty cool. It's a block. The others have all settled, I believe. And there's just this last one. A lot of this stuff is off-market purchases that I do. I did a Sydney property, 250 grand. You can buy it in Sydney for 250 this year. That was for a 1-bedder. I'm picking up some 2-bedders for under 300 still. I've got one at the moment, which is a CBD property. It is 1 unit. Comparable sales are at 650. I've got this one here for 495,000. This thing is in the heart of the city. It's not in Kent Street, York Street, George Street, whatever, but it's very, very close to that. And you get a car space. A car space would have to be worth 100 grand just on itself in the city. Picked up a property for someone for $18,000 and it rents for $600 per month. 18 grand. Bang, cash, outright. Most of your cars are probably worth more than that. Just did another one, which was a reval. Revaling it, I don't know the exact figure, but I know it got revaled and equity got pulled out. About 40k equity out of it. That's just a few random deals that I went through. There's a lot more pickup deals on a constant basis, but I thought I would share with you just what other people are doing out there. A lot of people that watch these videos that I talk to. I talk a lot about. I notice there's a lot of new subscribers nowadays on all different social media platforms, and with it, a lot of people might think Nathan just talks conspiracies. A lot of people think that Nathan talks economist talk, right? A bit more interesting than those bald guys on TV in the morning shows. So, here at B.Invested, run a different sort of range of businesses and services, ranging from a law firm, accounting practice, financial planning, a finance company. I was the 3rd or 4th buyer's agent in the country. Now everyone's a buyer's agent. There's courses for people how to be a buyer's agent. There's lots of scammers out there, lots of rip-offs, a lot of jokers out there in the marketplace. That's what you need to watch out for. I locate these deals for my investors on behalf of my investors. If you need help on that front, you can reach out and hit me up and I can help you purchase and secure those types of properties. But on that note, I'm going to get to your questions and comments. So with it, watching from the UK. Thanks, Judy. I'm noticing that we're getting sort of like a global audience now. So that's really cool. Thanks for tuning in. Ria's up. Zelda, hey. Lydia, hey. Janine, hey. Sanjay, hey mate, how you doing? Vic, hey Nathan, Tuesday. Got the beers out, that's cool. Tracy, anyone guess which way it will go? Mahmood, what do you think of crypto? I'll cover this a bit. I will do a specific video. Next week, I'm going to bring on my lawyer, Stephen Sudarowski, who's going to be talking next week. But I'll actually start putting together a content schedule of things that I can talk about for you guys. So if you want me to talk about specific topics, I will do a topic specific on crypto. I like crypto. I'm invested in the crypto. It's a very volatile market. But interesting nevertheless. So I'm very heavily invested in the crypto, but I wouldn't bank on the house or sell the house in order to buy some crypto. So yeah, sorry, my phone's just, I'm looking at it and it's opening up and whatnot. Take your money out of the banks. Look, be careful where to put your money. Is a safe place. There's lots of interesting things that you can do in this market. Make sure if you take your money and take it home or whatever, that you don't get clobbered, and there's the security risk of cash, depending on how much cash one has and how confident you feel of babysitting it, whether you have sort of protection, whether you have the good things that you need to protect yourself with. So just be cautious on that front. You can spread your risk. One important thing here, and someone asked me the other day that's dear to me, asked me, what should I do with my money that's in the bank? And I know that these people are more elderly. And I said, look, if I had a set figure of money, right? If you had 100 grand, apparently the banks have a deposit insurance scheme. And it's interesting, once again, that every country around the world has a $250,000 insurance policy on it, whether it's in the US or Aussie or Canada or wherever. But if you had $1 million in the bank, it would be important if you've got a spouse, right? So say, for instance, you've got a husband and a wife, put 250 under one name, 250 under the other name, go to another big, large bank, put 250 under their name, put 250 under that person's name. Or if you've got $1 million just for one person, then go put over 4 banks. There's some sort of ways to sort of minimize that risk, potentially, if there is a bank run. But, I don't think the banks will go under here in Australia at this point. I think they'll just print straight through it, right? Print straight through it, which will cause massive inflation. Sam, what happens when interest rates go to negative, Nathan? Well, I don't know. I've never seen it, right? The only examples of where I have seen negative interest rates have been in the Danish bank. There's an article, go and research news, I think Danish bank negative interest rate news. You'll probably find an article about how there's a Danish bank that went negative 0.5% on a 10-year mortgage. So if you took out a loan of $1 million, you would get $5,000 a year paid to you for having that loan, right? It's pretty crazy. But if the central bank was giving away a negative 3% and the bank was giving you still 2%, it means the bank's still collecting some of the money that's being given from the central bank. So will be interesting to see. Will we go negative? I'm confident we'll go negative, and I'm banking on it. The markets are rigged, the system's rigged, right? And it's really evident, right? And the poor souls that are brainwashed, watching TV, preying on everything that they hear from their government, and they're like, please just save me. It's really sad that people need to be educated. So try and educate people. I encourage everyone here, right? Like, I'll put out lots of cool content. I believe it's cool content. I give a lot of time to you guys in the community to share. I share a lot on Birch Feed. If you're not on Birch Feed, sign up to Birch Feed. Try and educate your friends and family, to try and spread the word of them, realizing that we're born into a Ponzi scheme and how we can sort of, capitalize on it. It's a game. Like, it's a game of Monopoly. It's a game of the people top. We're the chess pieces. Understand the board, understand where to walk, and try and look after your own sort of position on that. So if you can try and educate friends and family as well, that'd be cool. Tracy, walk down your shopping centre, 1 in 3 won't reopen. I think we'll see that. Trace, I fell through the cracks of job seeker. Not too sure what you mean by that. If you didn't get looked after by them, or if you got it. If people haven't got it, barrier to entry is very easy at this point, right? It's unlike any type of sort of Centrelink that's ever been given out beforehand. So, you should try and push for that. If it's out there, why not take the hand for a lift up at this point in time? Because it's only going to get very ugly out there after all this money printing sort of subsides. So, yeah. Ian, I love your rawness. Nathan, down to earth and real. I see that there's two likes there. I appreciate the feedback. I'll just try and say it as it is. Obviously, naturally, like I run lots of businesses. I'd love to help people out where I can. Ultimately, nothing that anybody does with my businesses changes my life. So that's probably why you get rawness, right? Like I'm self-made from my own investing and my own stuff that I do outside of my businesses, and I just share things to the community to ensure that you guys are informed, and I know if I do good things, and good things will come back. So thanks, Ian, for that. James, hey Nathan, great to hear updates this week. Question about finance, refinance. Just using round simple number. If you buy a property for $1 million with a $500,000 deposit, so $500,000 mortgage, 5% repayments, interest only about $25,000 per annum. Property value then increases to $2 million in value. So technically you have $1.5 million worth of equity. You refinance, withdraw the equity, then your repayments go up. How do you pay the additional repayments if your situation hasn't changed? How do you continue to grow your portfolio? I hope this makes sense. Good question, James. We'll learn that along the way, but in short, there's probably specifics here that we could go into offline. But in short, you're right. However, if we break down that number, let's say you've got a $1 million property, and the interest rate is 5%. Right? $1 million property, interest rate at 5%, $50,000 a year in interest repayments. Right? The property just won't automatically go to $2 million because it's very, for a property just to double to go to $2 million, people have to afford it, right? The servicing must apply, right? Now, what do I mean by servicing? People must have the income so they can go get the loan from the bank, right? So the bank either has to drop all its lending standards and lending criterias to allow people to buy, or something fundamentally has to change. Like, does the person earn double the amount of money? That could work. Does the bank change its lending policies, or does the cost of that money become cheaper? So if the person was paying 5% on $1 million, that would be $50,000 a year in interest repayments. If the interest repayment came down to 2.5%, which is where it's at the moment, and 2 years ago it was sort of 5%. If it came down from 5% to 2.5%, that means that it would come from $50,000 a year down to $25,000 a year in interest repayments. That would mean that if you went back, if they left the interest rate at 2.5%, then someone could come in and spend $50,000 a year on repayments, but the price would go to $2 million, right? And that's my philosophy around debt becomes relevant with inflation, because the more money they print, the cheaper the money becomes. Presto. So one thing is that as you're pulling that capital out, you could protect yourself in all different ways, which, obviously I can't give financial advice like that, especially on a Facebook Live, but, down at the pub with mates, standing 1.5 meters away, obviously to comply with Big Brother watching me. There's different ways that you can sort of protect yourself. If I was to pull out equity, and I have done that to build my portfolio, I didn't build my portfolio of 200 properties for not having set processes, procedures, and systems in place. When I've pulled out equity for myself, I always look at the new asset that I'm accumulating to have strong cash flow to be able to pay for itself and to pay for those expenses. So if one was to pull out equity, I would hope that the new asset would cover the extra cash flow. So have to wipe its own nose and have its own heart, lungs, and respiratory system there to be able to move forward and build that portfolio out. I hope that makes sense, and no financial advice, of course, everyone. Sam, I've sent an email to your team, haven't heard back. You guys must be snowballed. Keep up the good work. Sam, apologies for us not getting back. If you want to send an email over again to the admin at B.Invested. If you want to email me personally and you feel that, I don't encourage everyone to email me personally because I am snowballed, but for Sam, email me personally, and I'll get the team to get on top of it for you. Anthony, it's a bloodbath. It's a bloodbath out there, but people are going to get slaughtered. They really will. Tracy, yes, some people are getting more now than they did when they were working. Exactly, right? Like that's the silver lining. But how do you now take them off there, right? It's like a drug addict on drugs and then trying to rehabilitate them. But, they're needing this now. So it's in a system that people are stuck. It's checkmate. So... Melissa, hello. Hey, Melissa, hope you're doing well. Susan, hey there, hope you're doing well. Jonathan, what's the go with stopping stamp duty? Very, very good question. I've been sent a few articles from people about cancelling stamp duty. I actually just got one beforehand. One of my mates sent it over. And it says here, 9 News Sydney, it goes exclusive. 9 News can reveal the state government is drawing up plans to ditch stamp duty. This was very important. I should have put this in the news section today, but reveal that the state government is drawing up plans to ditch stamp duty, right? What would that look like, right? Everyone's like, free. I don't know that I was asked a question by one of my mates, and you know who you are when I answer your question for you about they were looking at buying a property and should we delay buying the property to save the stamp duty, right? And I saw you on here tonight, mate. And yeah, just think about this. It says here, the move would see buyers of an average Sydney home pay a land tax of $2,000 to $4,000 a year for each year they live in the house, compared to an average of $40,000 upfront stamp duty. Everyone is going to get fucking fleeced. They're going to get fleeced, right? If you own a property, it will be like capital gains tax, right? If you own a property before a said date, be like 1985 or 1988, 1987, 1989, different things occurred back then. I was born in 85, right? So I don't know every single figure that happened then. So yeah, give me a bit of break on that for the people that will pull me up on those specific dates. But they tried to remove capital gains tax in the 80s. And yeah, with it was a shit show. Things were grandfathered. So if you own a property before 1985, you don't have to pay capital gains tax. So if you had 100 million, let's say you got $1 million property in the 1980s and now it's worth $20 million in 2020. In 1980, $1 million, $20 million, sell it off, make $19 million on this thing. Would you be paying capital gains tax on that? No, right? I'm not an accountant, so don't take my accounting advice. But there's a thing called grandfathering. So they grandfather the rules before that. So if you own a property today, does that mean you'll be paying an extra stamp duty every year? They wouldn't be able to pass that, surely. I believe that we would see any property sort of purchase after, let's say that it was the 1st of July that they started this from. That means that all properties from the 1st of July would, in essence, not have to pay stamp duty, so you could just move straight into a property, and you just pay an annual fee of $2,000 or $4,000. How would that look in a market? I'm just thinking of it right now, right? Imagine if people didn't have to pay stamp duty, people could transact properties better, right? Is this quantitative easing to the property market? Is this a stimulus package? I know they're going to fucking destroy everybody, right? by charging extra money, right? Because you're going to be paying money every year. But the ability for people to get in the market, cost of entry to the market's easy. Everyone will be buying a property. So if they change stamp duty, all right, what's the barrier? You just need a deposit. Let's say you need a 5% deposit on a $500,000 house. Anyone with 25 grand, people can go, where would someone be pulling the 25 grand from? Think about it, right? People could be pulling it from here, there, wherever, right? People always message me, oh, should I pull it from super? I can't answer those questions, guys. People could be pulling it from any of these places. If they don't have to pay the stamp duty now, cost a barrier to get into the property, all they have to do is service it at a 2% interest rate on $1 million. 2% interest rate is 20 grand a year. That's $400 a week. $400 a week to buy a fucking $1 million property. Would it push up house prices? I believe so, right? I believe so, but it would be ugly on the cash flow side too. So I think, yeah, it would be very, very interesting to see how this would roll out. So keep an eye on that. Interesting to see. So I'd prefer personally to pay my stamp duty all up front because they're not going to fleece me. I play the long game, guys. So I wouldn't want them, charging me over, the next 50 years, 100 years of ownership. My children, my grandchildren, my great-grandchildren, and intergenerational, right? Like I'm playing the long game. Most people plan for, how they're going to spend their stimulus check or whatever. I'm planning on how I'm going to, change the legacy of my grandchildren. So that's what we need to look at as we're, building wealth as well. But thanks for bringing that up because I did forget that beforehand. Bloody crazy. People are waking up. The Nath keep spreading this information and explaining the logic. So people keep waking up. Thanks, Rob. Appreciate that. You guys are all independent souls. You're allowed to go and spread, your own view and wake people up. You don't want to be the crazy person, but you want to be the person that's taking action. People look back at me and say, every few years, people have gone, oh, this guy's an idiot. Oh, how'd you do it? Oh, this guy's lucky. I wasn't fucking lucky. I took the right actions back in the day, right? And the actions of how you choose to lead your life through this, being aware, being alert. I'm just one guy. You guys are all, different guys and girls that can, have an impact on your own world as well. So if we can all rise up, we can, have better, better outcomes in our lives and in our communities and do better things. So, Kane, hi Nathan, as always, great content. What is your thought on the ETFs versus direct stocks? Obviously, they're two very different vehicles, but I'm sure more interested in your thoughts on QE effects on each. Very exciting topic, Kane. So thanks. You might be opening up Pandora's box here versus ETFs versus direct stocks or even physical. I don't do ETFs. It's a Ponzi scheme. If we look at physical silver, for example, at the moment, physical silver is very different to the ETF silver and the spot price. If we look at spot price of silver, $20, $22, whatever, you can't buy anywhere in Australia for under $40 an ounce. So it's like double, right? And it's splitting at the seams, right? If we look at oil the other week, it was like you couldn't find oil at negative $37 a barrel, right? You couldn't find oil for free at the petrol pump. The reason being is that, there's a disconnection between physical and scammy sort of electronic traded funds. And this whole economic model, we saw today single-handedly what happened with the rates. The rates should have dropped, right? I showed in my previous video fundamental data that I looked at over the period of the last 12 years where I've been able to come out and say to everybody at the end of year, I do like for all my investors that I represent and purchase for and whatnot. I have an annual Christmas party and get together and always talk about the year ahead. I write to investors and talk to them about the year ahead and what things they should watch out for, what things that they should see and whatnot. And the reason why I've been able to look at that is the data. But there's a separation here right now, right? Because it's just the biggest Ponzi scheme out there, what they're doing in the financial space here. So if I can't hold it, if I can't touch it, I don't buy it. right? And it may be boring, it may not be sexy, it may not be flash, and it may not be fun. From the aspect of fundamental, it is very fundamental. So yeah, same thing applies, whether it be precious metals, whether it be shares, whether it be commodities, whatever it is, has to be physical. I need my private keys for my crypto. I need to have where I can access them myself. I'm not just buying something on a platform and trading something on a platform there. So always go for physical and not the ETF. But people do make money out of ETFs, and once again, disclaimer, because I know I've got a target on the back of my head from any of these people that are saying, "Oh, Nathan said something here, right?" I'm not a financial advisor. This ain't financial advice. But if you do need help on that, I don't trust many financial advisors. Most of them are sleazy salesmen. I do have two that I trust. And if you want to speak to one of them, I've seen how they behaved during the GFC over the course of decades, fundamental, how they carry themselves. I can put you in contact and have a chat and get some feedback from them. Matt, I thought you were wrong a while back, but I think you were onto it with what's going on being controlled. Then there is Bill Gates trying to control mankind and the planet. Matt, appreciate that. I think I've sounded crazy to a lot of people lots of times, not always right. However, I like to look for glitches in the matrix, and when I see inconsistencies and things going wrong there, that's telltale signs of things, and sometimes they lead to nothing. There's lots of conspiracies out there in the world, and if we went down every little rabbit hole, we'd never achieve anything in our lives. We'll just be thinking, "Oh shit, what's going on?" But it's important to do your own research, because I used to look at people and go, "Oh, like growing up, right?" And they say you shouldn't talk about religion. They say you shouldn't talk about money. They say you shouldn't talk about politics. You shouldn't talk about sex. You shouldn't talk about whatever, right? Anything goes to me. I just talk about all different things, and it's important, right? And it's important to be respectful and whatnot. But I used to walk around in life and go, this person, is a Liberal voter, and this person's a Labor voter, right? And you can tell, back in the day, people would, have certain beliefs and values and whatnot, and you can see how they live their lives, and that's cool. Nowadays, you see people that are, either, got their own brain and capable of thinking something for themselves, or doing an equation, or people that are, got a fluoride steering, and they're like, "No, the TV said that it didn't," right? It's like, well, is TV, the boss and the god of you, and is the information you're being fed? Like, you need to be questioning these sorts of things, and there is differences out there, and I appreciate that you got confident in what I do and the things that I say, and I'm not here to force opinions or views or whatever. I'm just here to give you a contrarian view on different topics, and question. I just question: am I right? I don't know, right? But I believe I am, and I make my movements in line with my belief system, and walk towards places where I want to be. And I think that's what's cool, because a lot of I thought about, when I started making some of these Facebook Live videos, what would people be thinking out there? It's like, hang on a second, I want to be working with people with common mindsets, common goals, common belief systems, and being able to achieve cool things. And that's why I started the business. B.Invested's logo, when we first started, and the slogan for it 11 years ago now, over 11 years ago when I started this business, is "live life on your terms," right? There's another one, "tell your boss where to go," right? And they're all, if we look back and break it down, exit the matrix, right? A lot of people think Nathan's gone crazy the last 2 or 3 years. Maybe I'm just being a bit more raw. Maybe people are being programmed too much. Maybe there's a disconnect of belief systems and energies out there controlling and whatnot. And I think personal liberty, freedom, and being able to take control of your life is really important. And from a property aspect, from a financial aspect, that's what B.Invested is all about. I know there's other channels here watching, whether it be Decentralized, which I haven't been on there for a lot because I've been too busy. It's about other areas of life, but it's it's important that you question and look at the social norm, because people are being rainbrushed. People go, the worst thing is now is that people go, oh, I watched on Netflix this documentary the other day. It's like, no, that's fake history that's been programmed. Like, people are being programmed via this fake history. And if you read that book, the 1984 by George Orwell, it actually talks about the dystopian world that's out there, where people, is basically where we're at the moment. So yeah, thanks for not thinking I'm crazy, and I appreciate that, Matt, and appreciate the feedback. Sid, hi Nathan, hi Sid, hope you're doing well, mate. Jonathan, what do you think of self-managed super fund and buy commercial property? Self-managed super fund. I personally have a self-managed super fund. All the people around me in my personal life have self-managed super funds. I think everyone should, at least look into and chat to someone that specialises in that sort of stuff. If you have got a super fund, want to know how you can take more control of your personal life and your own finances, flick an email to my office and talk about, just put in the subject SMSF, and I can get my team to put you in contact with the right people to talk about the benefits and how it could affect you in a positive sort of way or a negative way. Jeff, buy gold. I buy gold. I've bought gold. I've got lots of gold. I've got lots of silver. Not buying so much at the moment, but I am still accumulating. It's much higher. A lot of people with gold and silver out there as well. A lot of people just pray and obey to silver and gold and precious metals. I look at it more from a holistic view. It plays a part, as I was saying beforehand, as a ballast to one's portfolio. That's why I have investments in physical metals, and with it, I think it's important people do look at that and do put that as a part of priority in their own personal portfolio. But everybody's position is different, and I'm not here to suggest to buy it or not to buy it. But yeah. James, good question, mate. Good question. Keep the good questions coming, James. Nathan, you mentioned that if a bank goes broke, we would become a creditor. What happens to the mortgages? Important. You, as a mortgage holder, have a mortgage means death contract, right? It's a Spanish term. Go research the words mort, gauge is death contract, basically meaning that you're getting a contractual death. Interesting, but anyway, I love debt. I love mortgages, and I've got lots of them, and I wish I could have more, because it would mean I would have more assets. But in essence, when you take out a mortgage, it's a big, complicated document which says you have responsibilities to the bank and whatnot, and then you personally guarantee that. So to the bank, the commodity of the bank is you, right? When you go to the bank, it's the next 30 years of your working life that they have enslaved you for, and you're the asset of the bank. Your debt does not disappear. If you have a debt, well, let's say, for instance, there's a bill, right? There's debt collection. I know a bit about debt collection, not from personal experience. I have had issues with, oh, here's a letter from the thing, right? Ultimately, managing so many things in my life, things slip through the cracks. I get an occasional bill that's like someone didn't pay a council rate or a water rate, and over years I've had to create processes for that. But I do have adept knowledge of how debt collection firms work and people coming to collect, and how they go about doing that. It's important that you take interest in random stuff. Like, I don't invest into derivatives, but I want to know about them, right? I don't invest in the Dow Jones, but I need to know how it works over there. I don't buy funds from Japan, right? But I need to understand how the currency works, so then where it fits into the whole big spectrum of things. But for debt collection, let's say someone has a debt of let's say someone has a bill of $10,000, right? You can't chase it $10,000, but a debt collection company might buy that debt for $5,000 and say, hey, I'll pay you $5,000 and I'll go chase this debt and I'll get the $5,000 out of them, right? If I get 10,000, well, then I still get the 10,000, but you've got your 5,000 now, and the 5,000 profit is for me chasing that funds. You, as a debtor and your mortgage, you become the asset of the bank. So if the bank was to go bankrupt, then another bank would come in and purchase the loan book. I actually talked about this 3 years ago in my mentoring group and previously, and to my inner circle of investors. But I think I said it personally. I send messages to Ridwan actually on a regular basis, and he screenshots me. He goes, "I'm going to keep this for the future because it's interesting what you're saying. I could see that happening." But with no comment, he just goes, "I'm going to screenshot it." So I'm sure he has a folder somewhere where he's got all these screenshots and predictions that I've made. And I actually called that. I believe at some point throughout this disaster, whether it happens right now, I think, as I said earlier here, I think the banks in Australia are pretty well positioned to come out the other side. They're not going to go under per se, but I think that they're hollowed out. There's nothing left of them. It's bored out, and it's about to crack in the next cycle. So there's one more cycle in this system before we go boom and all the currency goes. But in this cycle, when we go through, I believe that the Central Bank of Australia, being the Reserve Bank of Australia, will have to step in and intervene and buy up the balance sheets of the banks. So there will be, I believe there will be issuers out there in the future with the banks where central banks may have to step in and buy those books and buy the rights to your debt, where the debt doesn't disappear. The debt is still there. It's just that you're not dealing with one of the big four banks. You're just dealing with whoever the bank is that's bought you out, or the central bank, or whoever bought that debt. So buying debt is a big industry. And your debt just gets sold on to someone else, and they just continue on with the loan, and you continue paying it. So it doesn't actually let you off that. But where you do get let off from your debt is where the inflation comes in, and your debt becomes irrelevant with inflation because your dollars are getting inflated away. Let's say that everyone's on $50,000 at the moment, and suddenly in the future, an average wage becomes $1 million. An average wage of $1 million, meaning that 1/3 of your wage goes to paying mortgage, or 1/3 of the wage goes to paying rent, would be like 300 grand a year in mortgage or rent repayments. On a 50 grand salary, it could be like 15 grand a year, right? You could use that money from the future to pay out today's debt because you're carrying that asset through market cycles, and that's where your mortgages get forgiven. Tommy, how you doing, mate? I did make a reference to you beforehand on something, which I think you may know what I'm talking about. Hi, mate. Here watching with my neighbour, Carlos, and he's sick of me always harping on about debts, investing, and how debt will be irrelevant with inflation. Can you please explain in a way he will understand the current bailouts will kill the currency, creating inflation where the dollars lose their value, and in turn how debt will be irrelevant, etc. Carlos doesn't want to get how the debts won't matter. Cool. Thanks for bringing the neighbour in, Tony. It's really cool. So with let's just assume that there's $1 million out there. Sorry, I'm dry throat. I've been talking for an hour and a half, and I forgot my water. I always do. But yeah, with it, let's say there's $1 million out there in the whole system. A house is worth $20. A car's worth $1. Food and groceries for the year's worth 50 cents and whatnot. If we were to add an extra $1 million into the system, where would that go, right? Would it just sit there, or would it find a home in the system, right? If there's a very good series, Tommy, and I think you probably may have seen it. I don't agree with everything this person says, but I do agree fundamentally with a lot of the things that he says. Mike Maloney, Hidden Secrets of Wealth, will explain the velocity of money. But basically, if you had that currency there and you printed more and more, it'd be like having the cup of water I'm looking for, right? If you have cordial, so you got a cup, and you have, I wish I had a cup here. I'll have to get up and get one. If you had a cup with cordial in it, you poured some water in, oh, tasty, got a bit of cordial. You pour some more water in it, right? Oh, it's less cordial, but still taste it, right? You pour some more water in. Oh, can't really taste any cordial in here, right? Pour some more in, pour some more in, pour some more in. Suddenly, it becomes like pissing in the ocean. It has no effect. The more money that they're printing to get through this cycle, the more money that they're printing to get through this time that we're in, the less value that money has, right? Let's say, for instance, right? I'm going to rip my, let's say this piece of paper that I had all the notes on beforehand, right? How much is this piece of paper worth, right? I can get 500 of them for 500 pieces of paper for $5, right? So it's like a cent a piece of paper, right? And then let's say, for instance, we go back to a month ago when no one had toilet paper, right? Everybody's trying to buy everything, right? There was none around. If there was only one ream of paper left and there was 500 sheets of paper for the whole world to divide, someone will want to print off a contract, someone will want to print off a prenup, someone will want to print off a will, someone will want to print off a bloody photo of their kids, someone will want to print off their school homework. Suddenly there's only 500 pieces of paper, so they become very, very valuable at that point. If there was an abundance of paper, right, it would become like a nuisance, right? You'd be like, I want to get rid of this, right? Like I opened up a whole pile of mail before and there's all bits of paper there, right? I'm sure if I went to some third world country and said, here's lots of paper, they'd be like, oh, wow, I can make whatever out of it. But to us, it's just a throwaway. Here we are in a world where they're just printing off more and more currency, right? There's more money being printed, more dollars being printed, and it has no value, right? It's like, well, why do I want to go buy this? It's just everywhere. Like, so when a shop takes currency or dollars into their possession, they'll be like, well, you just gave us $100 and now I don't want to, I've got too much of it. And the guy down at the other shop goes, well, if you want to take my USB drive, then you need to pay me double the amount of money because I've only got one of these left and I've got too much of this and no one wants to take it. So ultimately, the more money that's being printed, the less value it holds. If you've got debt attached to it, then yeah, the debt becomes irrelevant because you can pay it off with this worthless money. I just realized there's so many messages here, guys. Josh, hey, Bircho, would consider regional growth centres sound investments, or should you look at other outer suburbs of cities? I am located in Ballarat, 1 hour from Melbourne. Medium house price is 430, 10 deposits, okay. Get started, should I have 20%? Also looking at purchasing your mentoring program and wondering if you do one-on-one calls at all. Cheers, man, keep up the good. Keep it stiff. Josh, thanks, mate. Look, I can organise, if you want to reach out to my office regarding the mentoring program, I'm sure that one of my team can organise a catch-up and a phone chat for us. So very minimal time. Nowadays, I'm booked out till like September. However, if you do want to organise something, chat to my team. I'm sure they'll be able to organise something. Should you buy in Ballarat or whatnot? Let me just say, for Ballarat, like that's an hour out from Melbourne. It's more regional. Now, I'm picking up in Sydney for that, right? Like I'd rather have a capital city than a regional city for that price. If I was picking up in a regional town for, I said some numbers like capital city still for like $200,000, right? I would prefer to spend $200,000 in a capital city than $300,000-$400,000 outside of the capital city. So, but we can have a chat about that on the call because I know I've got to run through these because I'm losing all the comments here. So, thanks, mate. Vic, hey Nathan, I'm in New Zealand, would like to purchase property in Australia. I have cash. Is it possible? Can I get a loan if I invest 50%? What is the process? Should I follow? Can you help? Vic, yes, we can help you here. If you'd like to reach out to my team, send them a message. We can put you in contact with one of my lending people. They can talk to you about what we can do from a lending perspective, and then we can work out a property strategy and accumulation strategy for you on that front. But definitely possible. I have got people from all around the world which do purchase properties in their portfolio. Angelo, I know need to talk, get the portfolio moving forward. Got my number, hit me up, mate, and we'll get it all happening. Henny, hi Nathan, long time no speak. Henny, hope you're doing well. And thanks for tuning in this evening. Simone, late tuning in tonight. We'll catch up via replay. Thanks, Simone. Covered some really cool things earlier on in this video. So have a look through that. Rob, hi Nathan, my partner's still in a 70 to 80 grand job. Just went back to casual job and knocked back my 120 grand a year salary because I hate what I do, but still earn over 1K per week consistently. We have one IP and Vic, and a principal praise, is it still possible to get finance with me working as a casual? Rob, flick over an email to my office. I'll see what my team can do from a finance perspective and get back to you. I do run a very strategic sort of finance company. It's called Zinger Finance. I know that the guys at Zinger are watching this. On the page, there's a page at Zinger Finance, which has been streamed to as well. But yeah, with it, I need to have a look into the further details of your position. There's lots of variables there, but I can help out lots of people in lots of situations. As I said, I was reading out my properties beforehand that I'd purchased this year for people. There's stuff there for even $18,000. So it's there's opportunities out there. But yeah, on that note, flick an email over, and my guy's like, I didn't get a property portfolio of 200 properties without any with luck. It was built on strategy. And an interesting fact that I was thinking about the other day is that there's less than 17,000 people in Australia. It's ATO data themselves, right? ATO came out and said that there's less than 17,000 people that have 6 or more properties in their portfolio. I know single-handedly in our communities, all right, whether it be the 30,000 people here in Facebook, whether it be 50,000 people in my database and whatnot, which I've played some format, way, shape, or form in helping them get there, like the businesses have been able to. I know as a business, sorry, dry throat, as a business that we've helped like thousands of people build their 6+ property portfolios. So to get there isn't by chance. The difference between 1 or 2 or 10 or 20 properties in a portfolio does come down to having the right strategy. So we can help you out, Rob. Just flick an email over and I'll get my team to look into it for you. Brendan, hi Nathan, hope as well. All good at this end, mate. Thanks for tuning in and checking up on me. Hopefully you're good in your end of the world, mate. Shane, sorry I was late tuning in. My sister has a loan just about to go through with ME. Should they be avoided? Well, I don't think it should be avoided. If anyone's going to give me debt, I'd happily go and get debt from somewhere. But just be aware that where your money or your currency is sitting in an offset account, it's not your money, right? When you put money into the bank, it's not your money. They have your capital, and getting it back off them can be difficult at times. So have a strategy, have a finance strategy in place in order to make sure that you're protected and you can disperse. I've probably got about 500 bank accounts, guys. I've got about 500 bank accounts with all the big fours and all the second tier banks. And yeah, I've got all different entities. So if I ever needed to try and minimize the risk of something that's going to go under, from a bank perspective, I could shuffle my way through that and get out relatively unscathed. So yeah, with it, the only thing, run from the bank, but just be mindful of the games. All banks do this. All banks have done it. Going back a couple of years ago in 2016, 2017, a lot of the big four actually rolled back. If they felt there's too much risk in someone's position, they'd roll back their finance as well. Brendan, great content. Love it, Nathan. Thanks, mate. Appreciate that. Jamin, what do you think lending assessment rates will be are being eased last quarter of 2020 as currently borrowing is a challenge due to the bank still assessing higher rates? It's a wait and see. We don't control the banks; the bank control us. So I think it will get easier because they need to help out the market, as we saw beforehand with reading out the stamp duty changes that would help push the market out as well and whatnot. So I would hope to see sometime in the next few months, 3 months, 6 months, 12 months that it would relax, but time will tell, and common sense will prevail with us. Brendan, what do you feel is a good LVR across your portfolio during this period? If I could go to 95% in my portfolio, I would love it. Unfortunately, my property portfolio is only at about 25% LVR, so I've got very low debt, and it's just the way the cookie crumbles because my portfolio over the years has grown and whatnot. The banks, I don't meet their criteria. I've got an idea for the future of how I'm going to make that work, but with it, people going for 5% deposits, 10% deposits. I've always been an avid fan of going in for a 20% deposit because it gives you more options. If a bank comes back, for example, with a crap valuation or want to refinance my mortgage from one lender to another, then it makes it easy for me to be able to do so. So I'm a big fan of doing 20% purchase and going from there. Kane, nice jumper. Thank you, mate. For those of you that get it, you get it. If not, then you don't. But it's an interesting jumper. I made it myself. So thanks, mate. Thanks for picking that up. Michael, unless there was substantial improvements on the property, the house and land would be two separate assets, no grandfathering. Unless there was substantial improvements on the property, the house and the land would be two separate assets, no grandfathering. Michael, when you buy a property, you pay stamp duty on the land or the component of the property. It's the house, you don't pay stamp duty on a house. So if you were to buy, say, a house land package, for example, for $1 million, you're paying stamp duty on $1 million. If you were to purchase a block of land for 500 and then build a 500,000 house, you only be paying stamp duty on the $500,000. So, Graham Birchy, Graham, thanks for tuning in this evening. Lee, have you read interview with Chris Joyce on the future of property market bounce back, hosted by Peter Switzer, predicting increases in the range of 20 to 30% in around 24 months? What are your thoughts around this prediction? Lee, good question. I've never seen Chris Joyce. The Peter Switzer bloke, I've heard of him, don't know anything about him whatsoever. A range of 20 to 30% in 24 months. I never come out and say, it's going to drop between this and this. Because there's lots of variables out there. I did say that I was so excited by coming through this period of time due to the fact that we would see massive sort of upswings. The amount of currency and money that's being printed into the market at the moment is ultimately causing that will cause the growth. If you look at the charts that I've posted on to all the social media platforms maybe about a month ago, talking about when certain things have occurred in recessionary periods, we see that they drop interest rates and things to stop the recession, but then the ultimate point is that the reaction of them putting these measures in place to stop the economy from falling pushes the property market into a totally new trajectory. So I personally expect that we started the new boom in June 2019. The boom started in June 2019. It won't be noticed until probably 24 months' time. So this is a window of opportunity to pick up stuff at this point in time. But we aren't in a downfall. The downfall did occur 24 months prior to that point. Angelito, hi Nathan, thanks for the talk last week. Just added question, do you give yourself timeframes when you set a goal for your financial freedom? If so, how do you work out if it's realistic? Solid content as always, mate. Thanks for tuning in and really nice chatting to you the other night. With it, I always try and reverse engineer. So for me, I always try to go to the future, picture where it is that I want to be at, and then I'll work backwards to where I'm at the moment, right? So if I want to travel to Perth, right, and I'm here in Sydney, I first need to work out where is Perth that I need to travel to, and then how do I get there from Sydney to Perth, right? A lot of people say you fly to Perth, right? But first you need to work out where is the destination, where are you today, and how do you fill in the gaps in between. And it's easy to say, I want to be a billionaire. I say it. Yep, here we go. I want to be a billionaire. But reality of it is like it just won't happen, right? I need to reverse engineer. It needs to come into habits, right? A lot of people want to have something but don't want to do what it takes in order to get there. So I plan it like, for me personally, I do like 10-year plans every sort of 5 to 10 years and work out where am I going to be in the future? Who is the person that I want to be? Where am I going to be in life? From all aspects of life, like whether it be on a spiritual level, whether it be on a personal level, whether it be on a relationship level with people, whether it be in a position where I want to have children, how will I be the best father for my kids, all those sorts of things. And, you need to live life in line with that. Like quite often people say, oh, I can't find the right wife or the right husband or whatever. And it's like, well, you're trying to find them at the pub at 3 o'clock in the morning on a Thursday, Friday, and Saturday night. It's not going to happen, right? You need to be taking the right actions in line with the person that you want to be. Having clear sort of visions of where you want to be, breaking it down from, who it will take to in order to get to that position is really important. Like, you ain't going to become wealthy sitting at the back corner of a club, right? Getting bottle service, right? It's going to take commitment. It's going to take passion. It's going to take effort. It's going to take planning. I look at goal setting more like business planning for me. And I think about, a business needs to have certain requirements, needs certain, resources into it. As a goal, we need to look at what resources do we need. If we can't get there using this resource, it's like if we want to get from one location to the other, do you catch a car, right? Or do you catch a plane? Do you catch a train? If you're in New Zealand, and I know that we've got a few people here in New Zealand that watch, is it going to be possible to drive from New Zealand to Sydney? It's not, right? So we need to work out, okay, we might catch a car to the airport, we might catch a plane from the airport to Sydney, and then we might catch a bus from Sydney to wherever we're heading to. It's working out what is it going to take to get there, and sort of breaking it down, just like a budget, right? We look at a goal setting from a perspective of all these different areas in life. It needs to be broken down like a budget. The best way of me saying budgeting for it is it doesn't need to be budgeting in a dollar sense. It could be budgeting in time, minutes, hours. Are you doing the right things to go to spend time on your personal health? Are you going to the gym? Are you going for a walk? I want to get back to being built like I used to be, but I don't go to the gym, so I can't expect that it's going to happen. So I need to, make those actions in order to get the results. So, I actually did a video on this once. I need to go dig it up. I think it was in the mentoring program where I talked about specific goal setting and having sort of smart goals around that, and how I look at it. A lot of people just put photos and vision boards on their wall and be like, oh, I want to be a millionaire. I want to have this car. I want to have this house. It's like, well, it's nice to want it, right? But just saying that you want it isn't going to get it. Like, you need to do the actions and work out the bits in between. You need to know start and finish. You need to work out, the little steps in between how to sort of get there. So, hope that answers in some sort of way. But working backwards, don't just go, okay, this is the way it's going to be, because things can go wrong throughout the process. So you need to look at alternatives if things do go wrong. Erkan, thanks for the access to Birch feed. Thanks for jumping on Birch feed and enjoying it. I appreciate the feedback. I spent a lot of time providing that data for free for everyone out there. If you're not on Birch feed, you should be. Email my office your best phone number, your mobile number, and they will add you into Birch feed. Look, we've got a returning guest here today, Fon the Fondler from the other week. Do you take it from? Oh, look at this. Show me your nipples, Fon. Sounds like you're in the basement again in your mum's house, and wow, looks like you're back at it. So thanks for returning. I've blocked you last time, and I'm gonna have to just block you again. But wow, what a loser! They go to all this effort to come and make these comments in the videos. It's great. It's great. I find it fun when you come on here, Fon. Really do. Ash, feel like I've learned a lot more from these videos over the last month than I have in the last few years. Thanks, Dave. Ash, it means a lot. Really humbled that that you get good content from here. And I appreciate you tuning in. And if I just ask everyone is watching and that you do like this, if you could smash up the like, and also share it, like it, comment, and get the activity out there, because the algorithms inside of FBI book here do make it difficult for getting the message out there. So yeah, if you do like it, I'd appreciate if everyone can sort of share and get people into it. That'd be great. So Fon. Wow, lots of message from you, Fon. Fond to the fondler. Needs a block, gives us a strip show. Anyway, here we are. Good to see a real message in between all this spam that's coming through, trolling us. Dave, damn, I love Orwell. It's pretty good. Todd, mortgage death pledge is from French law. Interesting term, regardless. Exactly. A lot of the words that we use. Where did they come from? Spelling, right? It's a spell, right? It's the words that we can put you under a spell. There's lots of different ones. So, right, here we go. Fun, go away. What the fuck is Mike? Thanks, mate. I hope you're doing well, bro. Dave, no, mortgage means the contract dies once repaid. No one seems to have researched this. Thanks, Dave. James, last question tonight, I promise. You posted on Birch feed, fiat graveyard. Where do these currencies go? Like the yuan has been revived 4 or 5 times. How is this possible? Thanks again, mate, for the great content learning. 10 new things every week from this feed and Birch feed. Appreciate it for that, James. One thing I encourage you guys to do, if there's something, a topic that you're not sure of, go into the search bar at the top of Birch feed and type in like a word or whatever, and it'll actually bring up all the previous times that it's been indexed. There's so much content. Like, I've posted stuff in there for the last 2 years, 3 years, just random stuff. I had some mates in there. I was beta testing it. I had some people in there. They were aware of things before the market fell off a cliff. Yeah, go in there and research a lot of stuff in there. Where do all the currencies go after they die? They just change them over to a new type of currency. If we look at the dollar that we have, it's died multiple times. So it died in 1933 when they did the Gold Confiscation Act, and they backed it to the gold standard. They made gold illegal to own, apart from jewelry and numismatics, or however you pronounce it. Coins, basically, numismatics. And so, as holding those types of precious metals and stuff, like for me, I have coins, and I have bars, and I have all different stuff in my position. Just in case there was some sort of confiscation, you could like hide it in different ways, which I doubt there's ever going to be that. In 1971, the dollar died. They took it off the Bretton Woods system and made the US dollar the base currency to the world, backed by the petrodollar, which Henry Kissinger and triggered Nixon, President Nixon, actually debased the dollar and made it a total fiat currency. And everything is traded in US dollars. Anytime anyone's ever tried to change trade in the currency of the US dollar, they have either died, gone missing, or been a terrorist. So there's been multiple times when the dollar has died, and we're now in the 49th year. As of the 15th of August 2020, it will be 49 years that the dollar has existed in its current format. The average lifespan is in the late 20s to the early 30 years. So about 27, 28 years is the average lifespan of a currency, a fiat currency. And there's been over 10,000 fiat currencies in the last 1,000 years. The first hyperinflation occurred from a fiat currency in 1024 AD, which is very interesting when you look at where it came from. It came from China. And China, is an emerging superpower. They're trying to kill the dollar at the moment. So they're trying to make their currency, the world global currency. And that's where the position of struggle power is here right at the moment, is on that. So it doesn't, sometimes the currencies just disappear and die. Sometimes the currencies they look like the same currency, and they're just not. So just like Fon, right? He looks like he's Fon, but he's not Fon, right? He pops back every week with random shit. So yeah. Rob, thumbs up. Susan, what do we charge per deal? It's a flat fee per property purchase. If you want to flick us an email, I can get one of my team to have a chat to you about that in detail. There's two different pricings depending on the type of property it is. And yeah, I can get the team to run through that with you. Aidan, great information, Nathan. Thank you and God bless. And to you too, Aidan. Thanks for tuning in. Sam, number one, due to large banker debts coming up, do you expect it much harder to get mortgages in the coming months due to banks not lending? I'm not surprised by anything at the moment. All the fundamentals are off the table. Everything that fundamentally was working, the system was broken all along. It's been manipulated for so long, but the fundamentals are off the table. They're just finding new ways of stimulating the economy. It's going to take a while to work out, where the monetary policy is heading, and what ballast they're using at the back end of the central bank. So, if you can get access to capital, make a deal happen. That's my view. If anyone gives me money, I'll make a deal happen with it, and I'll make sure they get a better return than what I'm paying, and there's some profit in the middle there. 2, mortgage holidays end in 6 months. If banks don't extend, then do you expect a lot of forced sales? That's a checkmate position once again, because if they don't, work with the borrower, then they're going to crash their own asset value, crash their own asset. Like, we're at a point where we talked about beforehand, half the population is on government paid payroll, right? Is on the government payroll right now. And the whole system could implode, meaning that if, let's say that half the population lose their properties, or a quarter of the population lose their properties, who's going to come in and pick them up, right? So the fact that this situation is here means that the banks don't have many options. They have to be more negotiable now. So the opportunity is actually the flip side of that. So I don't think we're going to see a lot of forced sales. We could, but they're going to have to stimulate the economy so much. And that's what they're frantically doing at the moment. I wouldn't even say it's, they're trying to starve off something. They're frantically trying to, stop a deflationary cycle, which we're in, but steering too hard to one direction is going to take us on the opposite course of the road. So yeah. Brendan, the fondler, is back. He'll be gone very shortly. Lee, hi, no, thanks for answering my question earlier. Love the show. Keep up the good work. This is the interview link for the reference in your spare time. Appreciate that, mate. Thanks, Lee. I'll go check it out a little bit later. Toby, principal interest or interest only? Can't answer that question here. Put you in contact with finance guys. However, I personally like paying interest only. Why would you want to pay down principal? Why would I want to pay down principal at a 2% interest rate? I'd rather keep that cash flow coming through and use that as more working capital. But everybody's position is different. Most of my loans are principal and interest, but not by choice. It's just that they're there, so I just leave them. And I'm with the banks. I don't service the banks anymore, given my size and lending environment at the moment. So I just leave them as principal and interest, and that works for me. But in the early phases of my portfolio, interest only, interest only, interest only, interest only. And nowadays I'm just a principal interest and leave it there. But I've got a strategy behind that. Everybody's position is different. So what works for me doesn't work for everyone else. It may not. So yeah. Melissa, I haven't realised that the fondle is back. Got you the comments. Thanks for that. Dennis, do you think we can get 100% finance on a residential loan? Dennis, anything is possible. People are getting 100% finance, getting 100% finance for their salary now. People are getting 0% interest rates, right? The banks want to say 0% interest rates to be very careful because people like to cut up my words. But RBA 25 basis points, the bank's charging 2%, right? Who would have ever thought that would see interest rates at that sort of level. Can we get 100% finance? I'm sure possibly some way, shape or form in the future, they will be doing that to stimulate the economy. On that note, I just realized I've been here for 2 hours, guys. I need to go rest. I'm going to go for a big walk. I'm going to have some water to try and wet my palate. But on that note, guys, I just want to say thanks for tuning in. Until we catch up next week, stay safe, be awesome. If you need help, reach out to my office. Remembering lots of deals out there in the market. Don't let a good crisis go to waste. If you're not on Birch feed, make sure that you email my team your best phone number. They will add you to Birch feed. You can access my data, just stuff that'll look up random stuff throughout the day. It's history before it happens. You can either have it or not have it. Reach out to my office, send them your phone number. They will add you. And yeah, with it, awesome time to be alive. Very, very excited and blessed to be here. Thanks for tuning in. And we'll catch up soon. Stay safe. Be awesome. And fucking don't worry about that system, and make sure that you unplug your mates and family and show them that there is options, opportunity, and make sure that they're not getting played, you're not getting played, and you've got control of your own personal life. Talk soon, guys. Bye for now.